What's going on, boys? How you guys doing? What's up, Gurvinder? Just chilling, bro. How's Chelsea's Premier League title looking? What's up, Yash? How you doing? Let's get right into it. Super bullish day. Great way to start the year. I had a fantastic day. I hope you guys had a good day as well. SPY absolute ripper at the end of the day there, but the high of the day stayed almost the same. This morning, the high of the day of 477.71. We tested that here. Didn't really get through. And then at the end of the day, we got through and closed above it. So that's very, very bullish. Just looking at the overall chart on SPY and the action today with Apple ripping and stuff, I'm pretty confident we see all-time highs this week. It's the first week of the year. It's generally very strong seasonally. We got a bull flag on SPY, despite all the bearish bears out there, all the bad headlines, everything. We still just got a bull flag on SPY at all-time highs. Like, there's nothing bearish about this chart at all. After a rip of 5 straight days, and we're just flagging out consolidating for 5 days, that's very bullish. What's up, Ginger? How you doing? I'll take a look. Yeah. 1201. I'm sorry, I said 1200. Sorry, bro. Big flag here. We touched the 8-day moving average and then ripped right off it. So big dip buy opportunity here at the 8-day moving average if you had your lines drawn. I wasn't focused on SPY today, or else I definitely would have taken that. I was trying to get 480 calls for Friday. What's up, Vladdy? How you doing? I was trying to get 480 calls for SPY on Friday because I do see all-time highs coming. This is a very bullish chart. Like I told you guys, we can reverse, but my main support I'm watching is 472. So if we get anywhere near 472, it's going to be a train wreck this week. But for right now, 478.81 is the all-time high, and that's what I'm looking for by Friday of this week. Obviously, if no bad news comes or anything. Just based on the chart itself, I see SPY going to all-time highs this week. What's up, Andrew? How you doing? Happy New Year to you as well. So SPY, like I said, very, very bullish action. 5 days straight up in a line. Consolidate for 5 days. Now do we get that next leg up into all-time highs? Seasonally very strong. Let's see what happens. QQQ, same action, very strong today. Big dip in the morning to get out anyone that was holding calls. For Jan 1st, there's a lot of noise out there about the first of every month is usually very green. So everyone that expected that bought calls on December 31st of last year, they came into today. They were very, very happy. If they were greedy and they didn't sell here, they got absolutely wrecked. They panic sold down here and then they ripped it right back to all-time highs. So QQQ as well, closing above my levels here. The main level I have for QQQ support is this yellow line right here, which is 398.78. You just 398.78, guys. Very, very key support. Why? Because it's been resistance since the beginning of December. 398.78 has been a huge level on QQQ. We've gone up, we've passed it, and now we're just ranging in an upper. So if you guys follow Goldman Sachs, he really likes to trade ranges. So basically, QQQ was just balanced out in this range for the whole month of December until December 23rd. Last week of the year, we actually broke up, and then we were range bound in an upper range. And now we're in this range here. So this is the range here, kind of between 403.50 and 398.78. It's just a range. So we're balancing in this range. Again, very, very bullish chart overall. 5 straight days up, 5 days consolidation. This is very healthy consolidation. We did not give back nearly 50% of this move, which means it's a bull flag. So just waiting for higher highs now. QQQ over 403.50 should go back to all-time highs in my opinion. Despite all the bad news, despite all the COVID, the Fed raising rates, everything, we play technicals here. Tech charts matter, and the charts right now are pointing higher. What's up, Ricky? How you doing? And one main thing about this dump this morning, remember I told you guys in the chat, I don't think they flushed the market today. Why did I say that? Even though they were dumping it hard off open here? The reason I said that was because of this XLF daily chart. So if you look at this XLF daily chart, I've had this resistance line drawn on there for like almost 2 months now on XLF. We made a high back in October 26th on XLF. We have been consolidating under that for 2 months, guys. Finally broke above it today, back tested it, held above it all day, and at the end of the day we closed strong. XLF is the financial sector. It's highly weighted in SPY. What's up, Hamza? How you doing? highly weighted in SPY. So if you guys see, opened up above it, so breakout, hold, and then it just kind of went sideways above the breakout all day, which is very, very bullish XLF. Also, rates are rising, so that's a bullish thing for banks. Bad thing for growth, which is what you guys seen today. GS was a big winner. Good job, Gurvinder. I know you nailed that one. We called out GS calls way back down here. Obviously, I didn't hold because the market was so choppy. We called them right here at $400 calls for Jan 28th to include the earnings. And look at the run it's been on. Came back down, back tested my exact support line here that I have drawn probably from the weekly. Let's see. Yeah, so we just have like a weekly demand zone here kind of thing. Every time it goes back here in the weekly, it gets bought up, and that's exact. Used to be resistance, turned into support, broke down to the bottom line, and came right back above it. So good job acting on the Goldman Sachs guys. XLF was very clearly the strongest sector today. Financials showing flexing their muscle today, and as long as XLF stays above this resistance now, it's bullish for me. If we close below this resistance, XLF is back into chop zone, but for right now, this is a very clear breakout of a very clear trend line, as you guys see. So good job acting on it, Gurvinder. Congrats on your play. It was a great play. IWM broke last week's highs, but we rejected right off the 50-day moving average. 50-day moving average is at 226.25. We got above it today by 44 cents, but we closed below it. So tomorrow, top watch is the 50-day moving average on IWM. If we break above 226.25 and close above 226.25, small caps are bullish. I don't care what you guys hear on the news, on Twitter, on CNBC, on everything. The end of the world is happening, apparently. The economy is trash. Everything's locking down. Charts are telling us this is a bullish pattern. So if we close above the 50-day tomorrow on IWM, we can go on another rip. So let's see if that's happening. Right now, it looks like it's forming kind of an inverse head and shoulders pattern right here with the shoulder, and now, is this the low of the shoulder? I don't know, but if it is, and it breaks over and holds, it closed right on the neckline too, guys. So if you guys look at this right here, it's just the shoulder, the head, and if this is the right shoulder and it rips through the 50-day moving average tomorrow, IWM is also very bullish, just like XLF, just like QQQ balancing in this upper range, just like SPY balancing in the upper range. So everything right now is telling me that prices are pointing higher. Obviously, all that can change with some one bad headline. ES, I only had 4 lines on this chart today. It's from the spot gamma this morning. There's no secrets here. Like, it's not, you know. They said this morning 47.50, 47.75, 4,800, and 48.18, I believe, was the call wall. And you just seen it all day. It was just between those lines. It's very clear. Spot gamma is a very good resource to have. That's why Ricky or me post it every single day. It's a good thing to go over it every single morning. And as you guys seen here, the morning dump went right to 47.50. If you picked up calls here, I mean, look at the rewards you would have got, right? If you picked up calls at 47.50, you could have got this quick move to 47.75 and been out and gotten paid like 100x. You were not 100%, sorry, not 100x. Pulled back, didn't quite get the 47.50 because it was too obvious here, obviously. Higher low, and then we ripped into close. Closed at high of day. Very bullish, guys. No matter what the news is telling you, no matter what CNBC says, markets in turmoil. One thing that looks very, very bad to me is Bitcoin. So Bitcoin, we had this falling wedge breakout. Every single time I've called the top on Bitcoin, it's come down and it's formed a falling wedge after a few weeks or months of consolidation. So right here, we called the top at around 60, I think 60K. Dumped down, we bought back in out of this breakout, right? Same thing here. Topped out, we sold around this top, I believe. Ran a little bit without us. Falling wedge breakout, jump back in. Called the top here again at 60K. Publicly, like there's nothing to hide here. Jump back in this falling wedge breakout, but look at these falling wedge. This falling wedge, it never came back down. It never came back down. And usually these kind of falling wedge breakouts do not come back down. So this is looking very, very bearish right now. It looks very head and shoulderish. And if Bitcoin closes this, it needs to close back above the 200 day for me to get bullish again. And the 200 day is way up at 479. So we need a big move up on Bitcoin, or else this looks very, very bearish to me. Right now, it looks like stochastics are a little bit overdone, oversold. So if we hold this 48, this low right here of 45,678 is a must hold. Under that, it's going to be very tricky for Bitcoin in the coming months, in my opinion. Other than that, I'm still long some coins. Let's see where it goes. We've already closed some profit on some, so I'm sitting on a little bit of free money there. VIX absolutely dumped. Big spike this morning. I have a level at 1869. We got up to 1854 and rejected. Inverted hammer down. 1662 is the low of this bear flag. A breakdown under 1662. We actually closed at 1661 today on VIX. So that's very, very bearish on VIX, which means very bullish on indexes. So again, economy's trash, lockdowns, COVID, blah, blah, blah. Fed's going to tighten, Charts are telling us stocks want higher. Tesla, huge delivery beat. Called this play out to a T. I held those 1200s from Friday for a reason. I seen the flow. I seen someone knew something. So basically, I held those. I was down like 5K this morning. Coming into today, I was down 5K on that position. Ended up closing more than around, I think, to around triple that in the green. But this was all based on the flows from last week. Very clear breakout line. Very clear they crushed delivery numbers. Everything's price raises everywhere. And how do the reason I held these, how do the market makers screw everyone on Tesla? They dump it on Friday, so no one's bullish. They release good news over the weekend. Monday is known as Tesla Day. For a long, long time, I've been trading Tesla a long time. Mondays are almost always Tesla days. They gapped it up 70 this morning, so the calls and puts were way too much premium in them to buy, and they ran it right to 1200. Brick wall at 1200. I seen sellers there and stopped there all day. At the end of the day there, we closed actually at 1999.65 bookie. So I think I was pretty spot on there. After hours were running. So the scenario here now is they take out the brick wall with FOMO buying after the close on Tesla. Tomorrow morning, we're probably going to gap up. If we gap up tomorrow morning like this, I believe we will come back down and test 1200. Just because after hours is not as much volume. There's not as much buyers, sellers, just overall not as much volume. So tomorrow morning, if we get a retest of 1200, lotto calls will be in play on Tesla as long as it holds 1200 retest. So that's what I'm watching for tomorrow morning on Tesla. Other than that, I had a great play in it. I'm very, very happy. Sold the rest of them for 200%. What more can you ask for, right? Over weekend play. Amazon, very strong today. Very different. Everyone started hating Amazon. It's going sideways. But as Ricky will tell you, and Yash will tell you, and all the people in MSL that trade Amazon frequently, the stock is never dead. It just it makes everyone hate it. And then when everyone's sick of it, then it rips. So that's exactly what Amazon did today. Well below the 200 day on the daily coming into today. It was below the 50 day on the weekly coming into today. And just one day is all it took. Closed above the 200 day, closed above the 50 day on the weekly. And if this continues, look where it stopped though. The 21 days at 34.1479. We closed at 34.08. And the high of the day was 34.1407. So we stopped right at the 21 day. I want to see it get over 34.1479 tomorrow. Next level up is 34.54, which is the 50-day moving average. And then 34.90 I have as a big level on Amazon. Other than that, we need continuation tomorrow because if this rolls over and closes below the 200 day tomorrow, this is a very, very ugly chart. And I will not be playing Amazon calls for a long time. T-Doc from the newsletter. COVID plays were in favor today. Nice little 3.55% day from T-Doc, but you have to remember on these plays, where did they come from? This is a very clear downtrend, very clearly, and what I told you guys about capitulation, timing a bottom, there's always big volume there. There is big volume present here on the weekly. On the daily, I gave you guys a number, it's 99. Over 99, T-Doc has a chance to run. As long as it's under 99, it can go up one day, down next day. Up 2 days, down 2 days. Up 3 days, it's just range bound right now. Over 99, Sancho, it's end of year. I mean, we're talking about the first day of the year, guys. Come on. T-Doc is just range bound. Over 99 can get it starting to change the daily trend, which is when I get interested in T-Doc again. But other than that, it's just the demand zone here. And the reason it's support here is there's a big resistance back in October of 2018. So basically, we're at levels from 2 years ago, more than 2 years ago. And if it doesn't hold here, I mean, it can go to $1. I don't know. T-Doc, we need it to hold here. We need a reversal. We need some money coming into these types of names, and then we can get over 99, and we'll see a big bounce on T-Doc, in my opinion. Neo from the newsletter, weekly falling wedge right at the bottom here. Looked like it did a little kick save the last 2 weeks. We went below it, closed above it the week of December 20th, closed above it week of December 27th. And right now we are back in the wedge. If this thing moves back to the top of the wedge here, we should see around 38, 39. On the daily, we're kind of in no man's land now. If you didn't have calls coming into today, it's tough for me to take calls here just because it's up so much in 3 days. I mean, it was up 15% on Thursday and it only gave back a little bit. So big move from 27.80 all the way to 33.80. So a $6 move on a $27 stock is a pretty big percentage. And it's tough for me to jump in here, but if you're already in, congratulations. And I do think it has more upside. Twitter, the trade of the week / month. There's a reason I put / month. I usually don't do that. It's just because it's the same pattern as T-Doc, guys. It's just basing out here. The reason this is the trade of the week and month, you guys seen on the newsletter, this is the IPO range right here from 45.10 to 41.50. That was the IPO month back in 2013. That was the range of the month of the IPO, and we're at those levels 8 years later, guys. 8 years, and Twitter has not gained $1 in stock price. It's been up, it's been down, whatever. It could be a cup and handle, you could call it whatever you want, but this cup has way too deep of a candle for me. Handle, sorry. And right now, I will take Twitter long either on a break of 45.10 or a retest of 41.50, this bottom level. So those are the two levels I'm watching for Twitter. Other than that, I'm not touching it. It was obviously very weak today in a strong market. I mean, to be down 1.3% in when SPY is ripping like this, SPY is up 0.58% and Twitter is down that much. It's not very bullish. So I'll wait for one of those numbers and I'll jump in monthlies on Twitter and I'll take some size. Baidu. Weak start to the day. But if you look at the overall picture here on China, it's a very severe downtrend, right? No one's interested in China. You can say what you want. You can be bullish as you want, but the chart says it's very bearish. Right now on Baidu, the reason I jumped into calls is this day on Thursday, I seen massive flow for this week, Friday. Those calls are down quite a bit right now, around 65-60%. But what I see here is a way better hold on China NIM. So why do I say that? Big candle, right? And now we're just kind of holding above these moving averages here. Last time it did this, it did hold above, but it didn't get above the 21-day. Right now, we're holding above both. So the next measured move is at least the 50-day moving average, which is 154. If it keeps going, then there's a gap to fill all the way to 160, right about here. So this gap right here on Baidu is what I'm looking for to be filled. If it holds this bull flag and gets some momentum either tomorrow or the day after, I think it'll come and fill this gap all the way to 160. So that's what I'm watching for on Baidu. So I'm still holding the calls even though they're down a lot. I'll go over DKNG at the end, Sancho, just 1 second. So Zoom calls. We jumped in Zoom today. Yash brought it to my attention actually. Obviously, Ontario closing down, going on lockdown, closing the gyms, closing indoor dining. Big factor there. Big weekly resistance from all the way back in April of 2020, which is COVID. I think that was a COVID bounce. There was a resistance there, so now it's turning into support here. Every time it's gone off 180, there's been a decent sized bounce. We caught this run up here for you guys, God knows, like you guys seen that Friday, we absolutely crushed Zoom. It went up, it came right back down. So right now we're just playing this off of like a support bounce. You see the low here was 175.27. Then the low here was 177, and the low here was 177.24. So it's kind of like higher lows, just a little bit of wicks to scare people out. And it also kind of looks like a head and shoulder, I'm not going to lie to you. But the support held today. Big bounce, nice close. The calls are already green. I took the lottos because I don't want to be married to the stock just quite yet. If the lottos pay, I'll roll them out. Other than that, we closed right at the high of the day. Nice recovery. COVID headlines, everyone's moving online. All the universities are going back online, so I don't see why Zoom wouldn't continue. AMD super strong today. I said right in the morning they have an event tomorrow at 10 a.m. That's something to watch for. It has consolidated, so this 4 days consolidation, 4 days down. So you guys see the difference between this AMD and the SPY. So SPY was up these 1, 2, 3, 4, 5 days straight up in a line on SPY, and then 5 days sideways. This is very, very bullish consolidation sideways. The difference between that and AMD, look at this. So 5 days up and then 4 days down, but it didn't get back 50%. And also it has a catalyst tomorrow. That's why I liked it this morning. If they announce some good stuff during AMD event tomorrow, they should have a good day again tomorrow. But again, it could be sell the news, so protect yourself. All the calls from this morning should be up very, very nice. And if it holds this 50-day, we should go back and test this high of 156.73 before going back to all-time highs. But that's if the market allows it to go there. Other than that, let's see what happens in the event tomorrow. Very strong day today. Airbnb is one I've been pointing out all day. I was pointing it out back here because I seen the volume coming in. As you guys see, all these red days, all these consolidation days, very, very low volume. That's exactly what you want to see during consolidation, is just low volume. Just let it settle. People are slowly accumulating, and then just an absolute ripper. Look at this green candle, bullish engulfing over 172 resistance, and 50-day moving average at 178, where I think it goes next. If it gets over 178, I even see 188 trading. So keep an eye on Airbnb. COVID headlines, blah, blah, blah. Obviously, reopening plays are all green today. This one stuck out to me. Big bullish engulfing. Supply area right underneath it. As you guys see, this blue channel is all where they keep buying it. I mean demand area, sorry, not supply area. And let's see if it continues tomorrow. If it did close above all the resistances, everything is super bullish on Airbnb. Pfizer tricked me out at the end. So Pfizer play was based on this chart, guys. What is going on here? Okay, let me zoom out here. So Pfizer. So we had a top here in December of 2020. We had a top here in August of 21. And we had a top here in November of 21 as well. So very clear resistance line here. Finally broke through that resistance line. Let me get rid of these lines for you guys, make it clear. As you guys see, I put a little clock, a little alert here. Why did I do that? Very clear resistance line. We got a top, we pulled back, we retested the line. I was going to wait till the end of the day for these calls, but I opened up the hourly one time during the day right here. I think at the beginning, the hourly was very oversold, and it's Pfizer, guys. We're going to need vaccines for the rest of your life. So I took some calls for next week. I have some time on it because it is an hourly oversold play. If it does play out, it should pay nicely. I wanted to close over 56.77. Why did I say it tricked me? End of day, there was some craziness. I was watching this chart end of day because I wanted to cut it. And look at this candle right at close, guys. So it was below my number. All these candles, 5, 10, 15, 20, 25. This candle hit exactly 56.77, which was my number. This candle hit exactly 56.77, and this is the candle that tricked me. So this candle, I was getting ready to cut. I had my order open. I had everything open. And then the next candle, they threw in big buy volume, ripped right to my number. As soon as it hit 56.77, like clockwork, just dumped it down. So I didn't even have enough time to sell it. But there is big volume there. I'm comfortable holding these. We have another week on them. Let's see what it opens up tomorrow. Let's see what it does. And other than that, I mean, it's Pfizer, guys. I know it's ran a lot, but this vaccines aren't going anywhere. They're going to keep forcing you to do them. So before I go into DKNG, we pointed out Penn on the newsletter this Sunday. Why did I point out Penn? It looks like it's forming a little inverse head and shoulders. This setup is much better than DKNG in my opinion. So this is a little inverse head and shoulders action here on Penn. This is the one I was watching. Obviously, beat down stocks get bought up a lot in January. That's kind of the January effect. People sell for a tax loss purposes in December, and then they buy back these kinds of stocks in January. So that's why we're focused on these kinds of stocks. We have Penn, very clear inverse head and shoulders, tried to break out today, closed below it, but we did close above the 8-day moving average, which is at 50.42. So keep watching this one. If we close above this trend line, we should have a couple day bounce in it. Just because it's beaten up so bad, there's a lot of shorts that will be squeezed out. But the difference between that one and DKNG is DKNG does not look as good in my opinion. The inverse head and shoulders, can't really say, maybe. Similar chart, I mean, it's a similar chart. Actually, DKNG might bounce even more. Just because DKNG has stochastics way down here, RSI is still way down here. So if we break through this line on DKNG, which would be above 28.55, this one can bounce nice as well. I'm sure a lot of people sold this one for tax loss purposes as well. And if they start buying it back here in January, 28.55 break should send us on a nice bounce. Pen number for me is yesterday's or Friday's high, which would be 52.45. So those are the two numbers that I'd want to see break and hold before I jump into these kinds of stocks. Just because I know everyone thinks it's supposed to be a January effect doesn't mean it always happens, right? So wait for confirmations, wait for the setup to come to you. Don't rush in. It's the first day of the year, you know what I mean? Trade good. I had a great day. I'm not trying to throw back any gains. It's exactly what I said. The same on T-Doc. You can chase it here. You might get a 20-cent better fill than everyone else. You might get, you might catch the bottom. You might catch the reversal. If you guys zoom out on these kinds of charts, like what is this? This is not a bullish chart. We've been a straight downtrend since November. And that's when everyone thought was the bottom. And we still lost another 20 bucks on it. 50 bucks on it, sorry. Is at 156, everyone was saying it's so cheap, buy it. They dumped it another 50 points. Same thing on DKNG. I was even caught in DKNG actually. I thought the bottom was at 30 bucks. 35 bucks. We were stuck around 35 bucks. We were like, oh, this could be the bottom. There's a lot of support here. Like, look at this big white line. There's a lot of support here at around 35 bucks. And look what it did. Went straight from 35 down under 30. So you can't play. When you pick bottoms, you get sticky fingers. Wait for the setup to come to you. Wait for it to reverse. Wait for confirmation before you jump in. You'll get way better results trading, I promise you. And other than that, I mean, oh yeah, I got to go over MasterCard. Because Chumit, that genius investor Chumit that said he's the new Warren Buffett of investing, said MasterCard and Visa market caps are the highest they're ever going to be. He said that yesterday. So he's already wrong. And other than that, I mean, just a broadening wedge formation. Look, big day for MasterCard, up 3.24% on a blue chip name is a big deal. If this one wants to continue, I see around 380 even trading on MasterCard if we want to go to the top of this broadening wedge. Again, I like to buy at the bottom or short at the top. I don't like buying in the middle of these kinds of patterns. Just like I said on NEO, big falling wedge, but we're kind of right in the middle of the pattern. Not going to buy it. If you had it, congratulations. If you didn't have it, you could buy it. It's off the 8-day moving average. Every stock, the stock market only exists if there's people selling and if there's buying. That's what creates a market. So there's always people selling or shorting DKNG, like there's always people buying DKNG. So just remember that. It's basic supply and demand. That's what the stock market is at the very basic level. There's not no computer trying to screw you out of your positions. There's people shorting. There's people against you selling their shares. And other than that, I hope you guys had a great day. I hope you guys start logging your trades this year. We're going to do way better. We're going to do even better than we did last year. And I hope you guys have a fantastic 2022. I'll see you guys tomorrow.